Hello traders, Rich here, and here's a quick but detailed update on USDCHF. As usual, if you guys like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, USDCHF has been overall bullish for a while, making higher highs and higher lows, trading inside this rising broadening wedge in brown. However, it's currently sitting around a strong resistance zone, as we clearly see multiple rejections from it previously and especially lately. That's why we'll be looking for sell setups on lower time frames, of course, unless this resistance zone is broken upward. In this case, it will become support. We'll be looking for bust stops on the 3 test and then a movement to the upper resistance and upper brown trend line would be expected. But for now, let's take it step by step, right? We're around a resistance zone, so let's zoom into lower time frames and look for sell setups. If we zoom into H4 time frame, USDCHF lately has been trading inside this wedge pattern, and we are currently around the upper bound and also the resistance zone from daily and weekly time frame. If we zoom in lower to H1, we can see that we are forming a head and shoulders pattern. That's our left hand, and the right shoulder might be formed here. For extra confirmation for the bears to take over, we need to see a break below the previous major low, which would also be these highs right here. So, long story short, we want a break below this entire zone and momentum candle closing below it, proving that the bears are strong enough to take over again. And of course, as mentioned, we might still have the right shoulder before we trade lower. You got the idea, right? In this case, the bears would take over, and that would be our trigger to enter a sell. When the sell is activated, the stop loss would be just above the previous swing high, or might be here if you form a right shoulder, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective. For now, and until the bears take over by breaking below the zone as mentioned, USDCHF can still trade higher. It would be overall bullish because we are now in this impulse movement. We can still trade higher before the bears take over here, for example, or even as mentioned from daily time frame, trade higher and higher to break above the resistance. In this case, further bullish movement would be expected. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, USDJPY has been overall bullish for a while, making higher lows and higher highs, trading inside this rising brown channel. However, we are currently approaching the upper band, the upper brown trend line, which I consider an overbought zone or even a non-horizontal resistance. Also lining up with the supply zone or the last major high from monthly time frame. That's why we'll be looking for sell setups on lower time frames, of course, unless we have an aggressive breakup of it. In this case, further bullish movement would be expected. For now, let's take it step by step. We are currently approaching a resistance zone, and also if you zoom into daily time frame, we are currently trading inside this rising broadening wedge, the upper area lining up with the upper orange trend line. So yes, USDJPY can sit a little bit higher to dive inside the zone before we trade lower. But as long as we are below this zone, we'll be looking for a reversal, a bearish reversal, again and again, unless we break it upward. In this case, the bulls would remain in control. If we zoom into H1 time frame, for those who remember, I've posted a video analysis previously that we want the bears to break below this zone in an aggressive manner for the bears to take over, which obviously didn't happen. Instead, we traded higher, and we are currently retesting this area right here, which is also a supply zone, a minor one. So we'll be looking for sell setups. If you zoom into M30 time frame, we are currently trading inside this rising channel. So as per my trading plan, I'll be waiting for a new swing low to form around the lower trend line to consider it our trigger swing, just like this, for example. As usual, that would be our trigger. And when the sell is activated, when the bears take over, the stop loss would be just above the previous swing high, and we target a 1 to 2 risk reward ratio would to have an edge over the market from a risk management perspective, which would be around the last major low from H4 time frame. If you zoom into H4, that's our last major low. So for the bears to take over from a medium term perspective, we need to see a break below it. In this case, if this happens, we'll be looking for trend following sell setups on lower time frames. But anyway, for now, let's take it step by step. We are currently here, and that's what we are waiting for. Meanwhile, until the bears take over, USDJPY would be overall bullish, and we can still trade higher before the sell is activated, or even dive inside this area, or even break it upward. Best of luck, and I'll see you on the next one.